Do you have any spare cash laying around that you could possibly put into the market and have it work for you? Maybe even multiplying this cash into something more than what you initially had put in? Well, in today's video, I'm going to show you guys how to invest your first $5,000 into the stock market. I'm also going to tell you guys what my plan would be for this $5,000. I'm going to give you guys 3 to 5 stocks that I believe would be a great add into a young portfolio like this. Of course, this is not financial advice by any means, and these plays are going to be on the riskier side as you do have a smaller portfolio size of just around $5,000. But I made this work last year. Around February of last year, I started with around $3,000, and I've worked my portfolio slowly all the way up to around $50,000 where it currently sits. And it looks like we should break all-time highs later this week. So if you guys want to see a video on all-time highs in my $50,000 portfolio, so if we can hit 25 likes on this video, I will make sure to have a portfolio update and a $50,000 milestone update for you guys coming later this week. Oh, that's enough yapping. Let's go ahead and jump into this video and learn how I would invest my first $5,000 within the US stock market. Now, to take a look at our mock portfolio here with a current balance of around $5,000, I'd be choosing to pick around 5 stocks so I can equally weight my balance of around $1,000 into each one of these 5 stocks. That will give you an equal weighting across your portfolio and kind of balance everything out so it will work the most streamlined as possible. This will also knock out a lot of the risk if you guys are able to diversify not only between sectors, but also between stocks in your portfolio. There's a happy medium between having too many and too little. So I think this is a good medium for us right now, especially with a current balance of around $5,000. Now, let's go ahead and take a look at our first stock, which is a brand new one on the list, and it is going to be Zeta, ticker symbol ZETA. Jumping on to Zeta's chart here, you guys can see that we're currently sitting at an average price of around $12.56. The current market cap for this company is around $3 billion. And over the last year, we have seen a nice little sell-off from around highs of around $38.20 all the way down to around $10.91, which we saw just a few weeks ago. Now, I do think that this company is going to see a sharp turnaround, and I believe that is coming very soon. I'd like to see a little double bottom on this 1091 level and then a continuation higher. But I do quickly want to show you guys what they are doing on the financial side. This company has just recently turned profitable, and it is looking very great. Over here on our annual time frame, you guys can see that we have continued to increase in revenue. We have turned profitable now, and it is looking like we are going to start to increase those margins, which in return should bump share price up and really create more value for this company. Currently, with their forecast on TradingView right now, they have a forecast up to around $44 with a mid-range of around $25 and a low range of around $15. So either way you look at it, going off of TradingView, this company is undervalued and even severely undervalued at that. You guys can see we have a 250% gain just to get up to that $44 price target that they have. And I think something like that is possible maybe in the next few years as things continue to grow. But looking at what we could see for this year, I do think that we could honestly make it back to this $24 level, which would be about a 125% gain from those lows of around $10.91. I also think that it is a good possibility that we could get back above that $38 range if we are to get maybe a good quarter out of them, or if there is some other bullish news to come out within these markets. But for now, my first target would be that $24 range, up around 125%. After that, we'd be hitting our first main target where I'd be looking to take some scales up around 278% to around $41.52. But if we are to break that, it will be past all-time highs. So it would be enticing to hold up around 452% to my high price target of around $60. That's something that would come at the end of 2026, maybe early 2027. Don't think that this is going to happen in about 2 weeks or a month. This is something that would unravel over the next couple years, but this would severely outpace the market, and that is why I'm giving it to you guys, and that is why I believe it has value. So that is going to be Zeta in our first stock on today's list. Let's go ahead and check out what stock number 2 will be. So we have gone ahead and thrown Zeta on the list, and looking at that number 2 spot over on the bottom left, we have Dutch Bros, ticker symbol BROS. Now let's go ahead and jump into the chart because this is going to be a special one. Taking a look at Dutch Bros here on the weekly time frame, there's a lot of good stuff to look at, and mainly we're going to be looking at this cup right here. As you guys can see, we have this nice little cup formation, and it looks like once we do break out of this and towards all-time highs, we will see a nice little continuation much higher, which we will talk about in just a second. But I do also want to let you guys know how well this thing is following the EMAs. You guys can see we have multiple EMAs here, and it just seems like it bounces off of every single one of those EMAs. Look down here, and then look right here. If it doesn't bounce off one, it goes down to the next one and it bounces there. If it doesn't bounce off that one, it goes down to the next one and bounces there. If you were to buy every time this company hits the EMA, you would be absolutely filthy rich. But looking at some targets where we could head at a current price of around $70.65 and a current all-time high sitting at around $68.88. Sorry, $86.88. We could see a high of around $100 by probably the end of this year. I could expect a larger breakout to come as they are coming out with brand new things like hot food, and they're also looking to sell more products in store. So that could be a really interesting add-on for this company. Maybe some more money thrown in there, especially with things like hot food coming out and the opportunity to sell stuff in stores. That is a whole nother revenue stream that you guys are starting to bring in. So there's a lot of good stuff to look here, but I do think that we could see that $100 target by the end of this year, up around 42%. I also think that there is a strong possibility that we could see north of 100, up to around $134, which would be about an 89% increase. And the reasons I say that is because they believe that this hot food, if it is to work out, could increase their revenue by around 28%. That is a really, really nice jump. And that is just from the beginning of them adding hot food. Obviously, they're going to expand on that and make it better. So that 28% could turn into 40, could turn into 50, could turn into 60%. We don't know yet, but either way, it is looking very, very bullish. So I am expecting to see somewhere between $100 and $134 and somewhere between around a 40% gain and a 90% gain for this stock for the rest of this year. But I do want to let you guys know that the move coming out of this nice little cup is actually targeting much, much higher. And that is targeting north of around $230, up around 228% from current levels today. Now, I do want to preface this by saying this is something that would probably come around 2028 to 2030. This is something that I do expect this company will reach, but I do not think it will be as explosive as maybe some of these other names that could see 100% pop in, about a year's time. I think something like this will come, and I do think it will come before 2030, but it is not, too set in stone if this will be, this time next year. If hot food works out, it'll happen. I think something like this could happen, and I think it will happen over the next 5-ish years. But nonetheless, once again, this is severely outpacing the market, so I think this is a great play in our number 2 position for our mock stock portfolio. But that was Dutch Bros. Let's go ahead and jump into our third stock on today's list. We have now filled up 2 of our 5 positions in our mock portfolio. And taking a look at the bottom of the screen right here, you guys can see our third position is going to be Rocket Lab, ticker symbol RKLB. Now, I have recently started a position in Rocket Lab after moving a lot of my funds out of ASTS. After ASTS did run around 70% in 2 weeks, I trimmed all of my profits and moved it into Rocket Lab. And let's go ahead and jump over to the charts, and I will tell you guys a little bit more about why. Taking a look at Robinhood here on the weekly time frame, there's a lot of good stuff to look at. This is a very, very bullish stock. It ran from around $3.47 just about a year ago, all the way up to around $33.34, which is their current all-time high. Now, with this company currently looking like it is in this nice little cup and handle formation, it is very important to note that we have touched the 1618 extension, perfectly bounced off that, and that is giving me a reason to believe that we are in an Elliott wave theory move extension, and this could be possibly the start of the third wave extension, which would take us up another 140% from where we are at current prices, sitting at around $25.90. That would take us up, like I said, around 150% for our third wave move, up to around $63.26. From there, I think we could pull back down into our fourth wave move, which would take us down back to around prior all-time highs at around $33. We could also see that bounce around $44 to $33. That would be kind of a higher range where it's seeing if we're going to flip to support and resistance side, or if we're going to run with the Elliott wave theory and hit the fourth wave exactly. Now, either way, it's going to be very bullish for the stock. That is an area where you could trim at that third wave, buy back some more on that fourth wave, and run it up for that fifth wave. But I do have my fifth wave outlined at 436% gain. Now, I do not want this to be deceiving. This is going to be my 2030 price target. Now, this is about 5 years away. I do think that we could see $142. And my reason for that is going to be because we don't know what these space stocks are. We don't know what their value is. And currently sitting at around $11 billion market cap, I think that this company could easily see north of $100 billion, even a 10x from where we are today, seeing north of $250 price targets by 2030. And I really don't think that's too crazy to say. Same with any quantum stock. We don't know what the value for those stocks are going to be yet. Same with nuclear and other things like that. Since you don't know what those stocks are really truly worth, it is good to take a little flyer on these stocks, especially when we go over to Rocket Lab's forecast and we can say, hey, they haven't really turned profitable yet, but it's looking like they're looking to turn profitable in around mid 2026. And by 2028, they're looking to be at around a 47-cent EPS range, where currently they're at about a negative 40% or 40-cent EPS range. So that is a really good number to follow with these companies. companies. Also, we are looking at their revenue continue to increase, and this is the reason that I have chosen Rocket Lab over ASTS. If you guys look down here, I know it is small, but you guys can see that we have had around a $436 million in revenue in 2024, looking to go up to around $571 million in revenue in 2025. Now, taking a look at these numbers, you guys can see $436 million is no slouch. Obviously, it is not, $50 billion like Nvidia, but it is much more than ASTS. Currently, ASTS is only bringing $4 million in commercial revenue. I understand they have some good government contracts, but only $4 million in customer revenue is really not going to get it done for you. And it's really going to make it much harder for you guys to turn profitable if you guys are not bringing in money to start with. So that is my reasoning for why I've gone with Rocket Lab over ASTS. And once again, my high price target is going to be around $142 for this stock, up around 436% from where we are today. And then we are also going to be up around 140% for my end of the year this year target, which would be our third wave move up to around $63.23. So that was Rocket Lab. Let's go ahead and jump into our fourth stock on today's list. The portfolio is really starting to come together now as we have Zeta, Bros, Rocket Lab, and our fourth stock being AMD. Y'all know AMD, and y'all know it has been in a nice little decline over the last couple years. And it is looking like this stock is beginning to break out, and actually today it is up around 10%. So let's go ahead and jump over the charts and take a look at AMD. Taking a look at AMD here on the weekly time frame, as we know, AMD has been selling off for quite some time. It has looked like we have finally gotten that final bounce, and it looks like we have already rallied about 45% up to around $127 where we currently sit. And this stock is actually up around 10% today. So taking a look at where we currently sit at around that $130 range, I think that we could see about a 46% boost up to around $185 by the end of this year. And I do think that by around the end of next year, we'll see north of around $250 for at bare minimum a 91% gain from today's prices. And I do think that that will continue even higher. And I do think that this will really run over the next few years as this company is undervalued. And even since they have been undervalued, they've continued to grow their company, just making that insane, looking like they are going to run for ages. And I do think that that is going to happen. I think that we are going to run up around 205% to my top target of around $385. Now that is once again looking like something that will come around maybe late 2027, early 2028. If a bull market is to continue, we can see that by the end of 2026. There is no telling, but once again, guys, it's going to beat the market, and this is going to be a stock that is going to propel your portfolio higher. And this is going to be a great way for you guys to diversify your portfolio, especially with the other holdings that we have. This will be your good technology and semiconductor staple within your portfolio that will really help propel you guys higher. And I do think that this name is going to see a lot of influx and bullish news going forward, especially with things like Nvidia starting to reach a market cap where it is getting increasingly harder to push that market cap further and see that stock go up even higher. So that was going to be AMD. I'm expecting a 45% gain by the end of this year, a 91% gain by the end of 2026, 2027, and then a 205% gain by the end of 2028, pushing to 2020 or 2030, sorry. But that was AMD. Let's go ahead and jump into our fifth and final stock in today's video and check that out. We have now covered 4 of the 5 stocks in today's video, and taking a look at that 5th stock, it is going to be a very familiar name in Oscar. Now, Oscar Health has been absolutely killing it. I have around 650 shares of Oscar for a market value of north of $10,000. This is one of my largest positions within my portfolio, and I believe that this will be one of the best performing stocks over the next few years. And let's go ahead and break down exactly why I believe that. Before we jump over to the chart, I do want to take a look at Oscar's financials because I believe that this is where this company truly thrives. At a current market cap of around $3.17 billion, I believe that this company is severely undervalued. And with current revenues coming in annually of around $9 billion last year and an expected revenue of around $11.5 billion this year, it is clear to see that this company is undervalued. This company brings in more money than Hims, and Hims is worth about 5 times what Oscar Health is worth. So that is just a little bit of food for thought, something to think about. And that is what I've been thinking about and dreaming about for the last couple months, as I have been heavily going into Oscar. As you guys can see, they have also turned profitable on the EPS side of things, going from a loss of around $1.22 to a gain of around 10 cents, beating estimates the last time around. So that is a very good thing to see. And then also estimates coming in of around a 93% gain up to around $28 for TradingView's price targets. Jumping over to the chart here though on Oscar, you guys can see that we are in this beautiful cup and handle formation, which we have been talking about for what feels like the last decade. But this company is finally looking like it is beginning to set up and get ready to finish up this move right here and get ready to continue its third wave up to around $45. Now this third wave is going to take us up around 206% from where we currently sit, and our high price range is going to take us up around 336% to around $64.51. Now the way that this is going to work, we're going to have our third wave move, which takes us from our lows here of around $12.22 all the way up to our highs around $45. From there, we should expect another nice little pullback down to around all-time highs or around this range right here of around $23 to $25. And from there, continue much higher to around $64 to $65 to $68. And either way you look at it, this is going to be a great gain. And with this company operating and continuing to grow, I do think that by the time that we reach these $45 and $65 price targets, they could even be heightened because of this company's value by the time that we reach these price targets. For example, say that we reach $45 by the end of this year, and they forecast out next year that they're going to do $15 billion in revenue. Well, the $65 price target may get bumped up to around $75 as this company is and should be worth more. Now, with where we currently sit at $14.48, this would be about a 3x all the way up to around $65. And I'm really banking on this to be one of the bigger players within my portfolio. And I believe that once we do wrap up this second wave move to the downside, we will see an explosive wave 3 move up to that $45 price target. It's going to happen quick. People are going to chase this name. And just like I said, when Hims and Palantir were sub 20, that I believe that these companies are going to be great long-term holds. And I do believe that coming out of this cup and handle, we could even see a stronger move. Something that you guys can do when you guys are looking at nice cup and handles, you guys can measure from the bottom of the cup to the top of the cup, and then just kind of put that on your second wave move. And this would be targeting around $160. Normally, these are around 5 to 10 year price ranges, but whether or not you believe that we're getting to $162 or not, that would be a crazy increase from prices today, up around 1,000%. So a nice little 10x if you wanted to hold for the next 5 to 10 years. That is, of course, a maybe. That's kind of a shot in the dark, but definitely something to think about at the least. And with the way that this company is operating and looking to continue operating, it is definitely not out of the picture. So this is definitely something to keep on your radar. And this is why it is coming in the 5th spot on today's list. But that was our full portfolio. Let's go ahead and check out how it wrapped up. All right, guys, and that was our full mock portfolio. That is what I would do if I had $5,000 set on a table for me and I was looking to invest that within the US stock market. The 5 stocks that we chose in today's video are going to be Zeta, Bros, Rocket Lab, AMD, and Oscar Health. I believe that all 5 of these stocks have really great financials and good growth moving forward. While they're not all there yet, it looks like they're heading in the right direction. And if they are to continue to execute on top and bottom line, these companies will see a lot of profit in the future, and so will your portfolio. I believe that a $5,000 portfolio like this in the companies like we are seeing today could see a 30 to 40% gain by the end of this year alone. And I am coming from experience with that, as my portfolio is currently up around 60% year to date, which you guys will see if you drop a like and we get around 25 likes on this video. I'll be dropping a portfolio review and a $50,000 milestone video coming later this week. But that was it from me. Make sure you guys do check out the Discord link in the description down below. And thank you guys for 900 subscribers. I'm really thankful for you guys. Let's keep striving and hit 1,000 subscribers by the end of next month. I'll see you guys in the next video. Let me know what you guys thought of this one, and I'll see you guys later.